It's been a busy quarter with plenty of tax developments, from the evolution of the justified trust programs, the kick-off of some GST reviews, critical court decisions, and the OECD's approach to digitalisation, which is moving ahead rapidly. As 2019 draws to an end, it feels like we're again at a turning point in the tax world, with 2020 having the potential to reshape our landscape considerably. The ATO is more than halfway through the Justified Trust program, and many taxpayers have received their results and are wondering where to from here. We're also facing into the headwind of further GST reviews for a third of the top 1,000 population. For those who've received their results and are wondering about next actions around the top 1,000, there are strategic questions around how to respond to the next actions team when they come knocking, and particularly where you disagree with the ATO's view or where a matter has been flagged for an audit. Some taxpayers are being proactive and engaging before they receive their next actions. This may be a way of managing the process, depending on how you feel about the issues. It's very important to ensure that you're thinking now about what your strategy might be, preparing evidence and support that you might need, and deciding how you want to engage with the next actions team. Next off, the GST reviews will come about, and they will cover 90 of the top 100 taxpayers and a further 300 of the top 1,000 taxpayers between now and 2023. These reviews are very different to the corporate income tax justified trust reviews. The GST reviews are going to focus heavily on controls relating to data and look to assess the end-to-end system control environment for GST. For example, detailed testing of all your systems where GST calculations are made and all subsystems that feed in will be involved. There'll also be a review of the BAS process and the level of automation and transaction testing that's undertaken. The ATO are also introducing the GST analytical tool, which is the GST equivalent to the effective tax borne calculation required under the corporate income tax justified trust reviews. These reviews are intensive, and the ATO will want live walkthroughs with process owners who might be non-tax people. The ATO will also want documentation and evidence of controls being in place and working effectively. It's expected that the reviews will take between 6 and 12 months, but they could take longer. We've been finding that taxpayers who prepare well seem to have a smoother experience, and one of the best ways to prepare is to document your GST universe. This is your accounts payable and accounts receivable data flows, your GST accounting processes, BAS processes, and the control framework around it. What you really want to do is give the ATO your holistic narrative of your GST process. This avoids getting bogged down in disparate process maps or prolonging the review. We've found that this can actually be a challenge for many tax functions because of a limited visibility over source system data. So it's worth thinking about this in advance and doing your own controls testing and data testing. We've also found that the ATO will generally rely on pre-work where this has been done in anticipation of the review. PwC's tax controversy partner, Caleb Koo, has had some recent success in the High Court case for Harding. This case concerned residency and the concept of permanent place of abode. One matter that was key in the Harding's appeal process was understanding what views have been presented and upheld and dismissed in previous cases around residency, including the views that have been put forward when members of the current judiciary were acting as barristers. This is where case law transcripts can be very useful when deciding whether to take something to appeal and when anticipating the types of questions that will be raised. The Harding case will have a significant impact for other residency disputes in Australia, with over 33,000 tax audits covering this topic. Another critical case that was heard this month is the Glencore case, which potentially reshapes the transfer pricing landscape yet again. While the case is on appeal to the full federal court, the first instance decision suggests that the Commissioner's power to reconstruct transactions may be significantly curtailed. This is one to watch very carefully as we move into 2020. And while some might say it's too early to tell what will happen, we think this may lead to a shift in the Commissioner's focus to other integrity rules such as Part 4A. Finally, the OECD's agenda is moving at a rapid and some might say surprising pace as they try and reach consensus on tax and digitalisation by year end. Both Pillar 1 and Pillar 2 reforms have been released, with their impact being a redesign of how profits are taxed across the globe. It's clear from the framework that the impacts will extend beyond tech companies, and that while some industries are pushing for carve-outs, there's still a way to go before anything is achieved. We're expecting the pace of reform to be very fast and are encouraging all clients to consider these reforms carefully. We hope you've enjoyed this quick overview of the quarter's key updates that you need to be across.